Ladies and gents, we are live from Bali and the world tour continues. And if you've been keeping up with the vlogs, you can see we've been in some of the craziest villas, doing some big things together as a team. And people always ask me, hey Waqar, can you travel so much, 30 plus flights in a year and still trade? Well, the answer is yes. And the reason I can do that is because I follow a very specific trinity that I'm going to be sharing with you in this video. No matter what trading strategy you have, no matter what approach you have to the market, if you add these three things, it's guaranteed to make your system better, to make you more returns, and all the while having to risk less. And in this video, I'm going to be giving you the exact framework on how to approach a day, because as you know, there are daily cycles. So we are going to be connecting market structure with its points of interest with the daily cycle variations of Asia range, London, and New York, and how they interact together aligned with that trinity is exactly how I'm able to travel the world, make millions of dollars from trading. Not only that, live stream the whole thing. In fact, today's trades that I'm going to be sharing with you is exactly the trades I took on a live stream, which is something I can't fake because I'm on a live Zoom call with my members, going through candle by candle, going through the entire session, and exactly when I enter a trade, where I put my stop loss, when I break even, when I take a partial, the full experience. And this is not just a one-off thing. Over the last 15 streams that I've done, I've been able to gain over 16% with trades taken on the live streams themselves. And by the way, if you stick around till the end of the video, I'm going to be telling you exactly how you can download this entire Zoom call, the entire recordings of the live stream that I had with my members, a sneak peek behind the curtains of how I trade live, and you can see exactly my thought processes and each comment that I had as I was navigating the session. So first of all, let's jump into the theory. So first things first, we have very simple market structure, a lower low, a lower high, and a lower low. What does that tell us? We have a bearish market and therefore an associated supply area that we would look to sell from. And what do we expect price to do from here? It's obviously to continue to go lower. But when price fails to make a lower low and makes an internal high, that's when we begin a complex pullback. And now we know that we have a bullish internal trend from high, higher low, higher high, and then we know we can start to have this complex pullback all the way to the supply zone. Once we have that supply zone, we can have a replication of this and go on to make a new lower low. So we have market structure, which is a bearish impulse, a complex pullback, and then a bearish continuation. So once we are within the confines of a complex pullback, this internal bullish price action, then we have an internal trend to follow. We know we're temporarily bullish, and we know we have a final destination, which is probably going to be the supply zone. So that's one framework, which is points of interest. We know we have an immediate trend, which is bullish, and then we have overall trend, which is bearish. So what does that mean it's going to look like? Most likely we're going to have a bearish short term, a bullish midterm, and a bearish overall outcome in the long run. That would be how you navigate trends based on where you are in the market structure cycle. Now, how can we add a bit more strength to this? We know that we'll have a retracement down over here. And then when we have let's say a build up of an Asia range liquidity with the highs of Asia, with the lows of Asia, maybe you get a sweep in London, and then you start to get a very aggressive push out and you make a new higher high. When you see something like this, you say, okay, we have the higher low that made the higher high. We have found a new demand area. Well, there's more information over here because we have these lows, the Asia lows, for example. Those lows were printed as liquidity. The double bottom, the triple bottom, the area that a lot of buyers would be getting in prematurely. Then when price sweeps that area, it gives that inducement and goes on to make a higher high. Well, that's when we know we have an inducement demand. Now, this is where things start to get interesting because once we have an inducement demand, we qualify the point of interest. So how do we qualify it? We number one qualify it by how much time we spent in the duration of the point of interest, how long we hung around in consolidation. So we can see something like this where we started to consolidate from here all the way to here before we started to have the push out. So that's rather a good consolidation. Whereas opposed to here where price just went down and then went up. Not much consolidation. So we strengthened this POI because of the duration it was hanging around before it had that expansion. Number two is we look at the depth of the retracement. So from the previous higher low to the higher high, we see where did that retracement come to? And we realize that this retracement was a very deep retracement. Not only a 61.8, not a 71, but actually let's say a 90% retracement. The deeper the retracement before a higher high, the more qualified the point of interest is because we know we came all the way down into discounts. So we had good duration, we had good depth of the retracements, and then the internal price action, we have an inducement, and it also goes to make a higher high. These all things are wonderful things to connect together to give us a strong POI to confirm this zone, to have that short-term trend, which is going to be bullish until the supply. So now as price has made the higher high, we have plenty of ways price could start to retrace back down, but eventually what we want to be seeing is a consolidation, and that consolidation can just be an Asia range once again, and this is where we can begin our daily cycle variations. So you've seen the previous videos I've made going through how to read Asia range in detail, not just the highs and lows of Asia range, but in fact how to read each candle within the Asia range and seeing how you can utilize that information to your advantage, because there's a lot of detail inside of the Asia range. But once that is complete, we will mark out the liquidity pools, which is the highs and lows. Now we have a few areas over here. Number one, we have Asia low liquidity. Number two, we can have a smart money trap zone. Now I'll explain that further on what a smart money trap zone can look like, and then we have our real demand area. Now this is how we can start to structure daily cycle variations. Now when price goes from A to B, there are certain roadmaps that price will follow. These are daily cycle variations. And what do some of these daily cycle variations look like? Well, we've done previous videos on it where you can see exactly the types of daily cycle variants that there are and what are the most probable ones that I recommend you trade from previous case studies that I've done. But in this case, the one I want to consider is when we have Frankfurt Open. Frankfurt Open comes into the smart money trap zone, gives a reaction to invite in those buyers. So those traders will see Asia lows swept, price coming to a smart money zone, giving a false reaction. That's going to be in Frankfurt Open. So time is going to be key for price. And what happens next? Price in London Open induces that area. It takes out the Asia low liquidity, takes out that smart money zone liquidity, takes out the liquidity of all of these early buyers, and now we enter the inducement demand, exactly where we want it to be. Now, what is this also going to do, by the way? It's going to bring in all of these sellers, the people that are seeing all this trend line touch, 1 touch, 2 touch, 3 touch. There's going to be bringing in sellers that are seeing these points of interest, and they're going to be seeing these as versions of supply. That's going to bring in sellers into the markets, and also we've wiped out buyers, a good definition of an inducement. Now, once we get to this demand area, this is where the trinity comes in. If we have London Open, we have lower time frame confirmation, and we have inducement. These three things, this is always going to be a strong way to identify a high quality setup and also navigate the daily cycle variations better alongside your points of interest and alongside your market structure. So what that could look like is we come into the demand area, the confirmed one, we get a lower time frame confirmation, a 2-leg protocol, and then price does a breakout, takes the trend line liquidity, takes Asia high liquidity, takes all these weak supply zones, and eventually goes on to make, maybe even invite sellers in from here, maybe even get sellers interested from that zone. And then what does it do? Take that liquidity, gives them a bit of a trend line. We're at a supply zone, we're giving a double top, we're giving a trend line. And then what does it do? It induces all of them out. It takes out the local trend line liquidity. It takes out the previous high liquidity, takes out the Asia high and all of that liquidity. And now we arrive to New York window. Once we're in that New York key window, then we need to see inducements of the highs, lower time frame confirmation, and the key window of time. Let's say we have once again a 2-leg protocol, then we can sell back down to make the higher low. Now that can be a perfect New York trade. So in this instance, we will have a London buy position that we see after coming into a preferred demand following the liquidity cycle and the daily cycle with the trinity that I mentioned of lower time frame confirmations, inducement, and time of day. And that gives us a variation to buy. After taking Asia low, London can be the fuel to buy, and then New York can be the reversal. After doing once again the trinity, inducement, lower time frame confirmation, and time of day. So it sweeps the high, so it sweeps the high over here doing a medium inducement. So it sweeps the high over here doing a medium inducement. Sweeps local highs over here, minor inducement based on the local trend line. And then after that inducement, lower time frame confirmation to get into the sell in the key time window, and that can be selling down to demand. And that's exactly how you can get quality setups following the daily cycle roadmap. Oh, and when you zoom out, you just say, oh, that's super simple. We just add higher low, higher high, higher low, higher high. Yes, it was just market structure, but there's so much more detail to unpack. And this is how you package high quality trading following that trinity: low time frame confirmation, time of day, inducements. Once you add these three things and you add it to a roadmap of a daily cycle, this is where you unlock very powerful trading. And when I'm traveling, when I'm building businesses, when I'm doing everything that I do, this is how I'm able to not only take trades myself, not only pull out millions of dollars from the markets myself, but actually do it in front of the world. With the public documentation that I've done with my signals, nothing that can be faked because it's live call outs. Doing that for over a year, 70 plus trades, 55+% gain, and also on live streams with my members doing 15% gain live on stream. How do I do all of these things? I follow this simple system. And just like a casino, as they say, the house always wins. The reason the house always wins is because they have a system. They have a predefined edge and they just let the data play out. I don't put overemphasis on one single trade. I don't overthink any market condition. I just follow my edge. If I take a loss, I take a loss. If I have a win, I take a win. But I know that longevity is the key. What is my data over time? Because the casino doesn't panic if a gambler makes a lot of money on one day, because they know their edge is baked in, factoring in those great gamblers and factoring in the worst of gamblers. Same for myself. I factor in my great wins and winning periods. I factor in my losing periods, and I know over time neither of those matter, because just like the casino, I have a baked in edge. So as I go through this case study, I'm going to be showing you the exact Zoom call recording and see exactly how I was navigating that live in time. And then I'll give you the ability to download that so you can have access to the live recording also and study it at length at your own time. So over here, I have a very simple market structure case where we have a supply zone, a lower high that made a lower low, a bearish push in the market, a bearish impulse. And then we had a bullish retracement where we had the inducement over here, allowing a bullish breakout. Then what do we have? Consolidation over here, 1 touch, 2 touch, 3 touch. After that inducement finally led to a higher high. So what do we have? We have 1, 2. This number one had an inducement. The number two had an inducement. So inducement over here and inducement over here. And more importantly, when we read the narrative, we see when price arrived to the supply zone, sellers came in, couldn't break the lows. Sellers came in again, couldn't break the lows. Sellers, after doing a small inducement, they They then broke the lows. They then broke this level of support, but only temporarily, because that's when the buyers came in. They came in on the demand area, the high of the demand range, from the last sellers to the first buyers, defining the range of demand. Price came into the top of that range after taking all of these lows, and that inducement allowed price to come higher. And therefore, that inducement allowed price to come higher. So what do we see over here? Inducements once again leading the show. Inducement over here leading the push up. Inducement over here allowing price to break support. Inducement over here allowing price to make higher high. Inducements lead the show and they leave points of interest. So when I jump down to a lower time frame now and I add on my custom indicator, this is where I start to see how things can get interesting. So now as I jump down to a lower time frame and turn on my custom indicator just so I can see the timings and so forth, this is what I started to notice. Not only do we have the inducements, we have a few more details. We have not only the sweeping of the high of that supply zone, of all of these equal highs of that smart money trap, and obviously the previous supply zone. We had an inducement, but when? During an Asia range. That usually becomes a form of smart money trap, especially if it's a higher high. So I knew price would magnetize towards that, not only because I have an inducement demand and I want to replicate price action in terms of trend, just simply going to be the case of price did an inducement, made a higher high, we have a complex pullback down into demand, and then we go on to make a new higher high. So if that is the plan, this area should most likely fail, not only because it's a smart money trap, because it's also a higher high and an Asia high. So I had a lot of reasons for price to go higher, not just market structure. But then when I frame the day, this is where things get interesting, because I know that the inducement of the day so far is at the Asia range. We have an inducement high, a higher high, so price should go lower, maybe to this demand area. Inducement demand. What do I also notice? Not only do we have Asia low liquidity, we also have this smart money zone where we have lows, sweep, and then price pushed higher. So I know price is going to arrive to this area, but when we have such proximity to Asia range, I usually consider it a smart money trap and not a tradable area. So do I expect, and this is something I was vlogging, by the way, as I was live streaming, I was also vlogging and traveling, and I gave a roadmap for the session. I said, I'm expecting XYZ. What was I expecting? I was expecting price to come lower and simply do a case of sweep Asia low, come into this area at Frankfurt open, give a smart money trader's reaction, a buyer's reaction to invite more buyers in, and then sweep lower for a London open buy. That was the plan, and that's exactly what I planned out. So once my framework for the day is built, I see what is happening. Number one, price comes in, sweeps Asia low. Perfect. What is the inducement of control right now? Is this area. We see that price did an inducement over here. That is the inducement leading the show for now. And then price went on after that inducement to make a lower low. Remembering that we have the inducement of the high, the medium inducement that we have leading the show. Then we have these minor inducements continuing that. Then we see price continues on. Frankfurt open, what does it do? Exactly like clockwork. Does a minor inducement low to invite buyers in. Smart money traders are going to load up in this zone after seeing a bullish breakout. Lower high, lower low, higher high. Buyers are entering the market for sure. What did they see? A short-lived reaction. Perfect. Where is price going to go next? Most likely it's going to go towards this inducement zone. Perfect. How does it do it? It takes a bit of highs first, sweeps those highs. Where does it go exactly towards? Goes exactly towards that previous inducement, and therefore we have another inducement ruling the show. That inducement right here for me confirms control. There is no reason to buy, and I know it's a smart money trap. So I know this area, even though buyers are going to be interested because it's Asia low sweep, London open around the corner, we have a small inducement over here. This is a trap. It's a clear trap. We defined it from a daily cycle variance. So what do we expect? London open to just melt through this zone. What do we see? Price just break through that zone during the London open. Perfect stuff. The liquidity kicks in, and what am I aiming for next? I'm aiming for, during my London window, for price to come to my optimal demand area, and I look for a buy. I was on the stream live with the members looking for a buy opportunity if price came to the optimal area, and they gave lower time frame confirmations. We can see very small build up and inducement over here, build up over here, inducement over here, confirming inducement number one, inducement number two, inducement number three after Asia range. Now we're in that key demand area. I'm looking for ways to buy, but I didn't get anything, and now it's leaving my key window. What is the trinity that we follow? Inducement, we have that. Asia low inducement, smart money trap inducement coming into demand area. Perfect. And what do we wait for? Lower time frame confirmation and time window. And that's exactly what I put in the stream. Let's see if there's a rejection, therefore lower time frame confirmation and the London open. That's actually something I left from the actual recording, the live stream that I was doing. Now what do we see over here? Build up of liquidity. So what happens after a build up of liquidity in demand? Naturally, you'll have an inducement low, build up some more liquidity. Boom. There we go. We built up some more liquidity. Then we finally see the inducement. So now what do we have? We have step one, which is inducement. Now what do we need? Lower time frame confirmations. So I need a bullish break of structure. Perfect. So now that I've seen that bullish break of structure, now the trinity is aligning. And this is exactly how I can look to get in. We have now bullish break of structure, lower time frame confirmation. We have the inducement, something I'm really keen about. And then I think, can I get into this trade? Well, I see this is my key window of my London open. This is now 1 hour outside of the window. It's not justified for me, especially when I'm traveling. I want to stick to prime setup. So even though this is a great trade opportunity, I don't want to deviate away from my plan, specifically the trinity, which is time, inducement, lower time frame confirmation. So now I have inducement. Now I have lower time frame confirmation, but I don't have time time of day, so I walk away from the opportunity. But what are we expecting from the beginning? You saw it in the vlogs, you see it in the live stream. I'm looking for price to make a new higher high and attack this liquidity pool over here. What do we have alongside all of this? All of this becomes liquidity. Boom. All of that is now a liquidity pool that I want to be taken out, and therefore these inducements have served their purpose. That one, that one, that one. Now this inducement could be leading the show. So price doesn't actually come back towards the preferred area of demand that I would want. So it didn't actually give the lower time frame confirmation its completion. And now we're approaching New York Open. And this is where I came to the market, where I say, okay, perfect. Where is price right now for New York key window? Well, it's arrived to that previous inducement zone. So I say, perfect. Price has come to the previous supply zone. It's starting to give a bearish reaction. It's given a bearish break of structure. Maybe I can look to get in. So at this point, I also was keeping my eyes on GU, as I always do. These monkeys are going crazy. You can hear them. All the Bali nature is coming out at this time. So this is actually some of the markings from the live stream as well. And we can see how we were mapping things out. And look how certain things from the stream mapped out perfectly. I put an arrow from here to here, knowing that price is going to go bearish, pretty much perfect. What does it follow? Asia high sweep. Once we have that inducement, then what do we have? Time of day. We have time of day and inducement, and then we have a target, immediate trend. I couldn't get in because although I had inducement and time, I didn't have lower time frame confirmation because I needed a internal break of structure first, and after that break of structure, I needed price to come to that inducement before I sold. Price didn't do that. Price didn't come to this area, so I was not able to sell. So I didn't meet my trinity, so therefore no trade. Protecting myself from reckless trading. Then when price started to do this second leg and I started to see prices stalling, building up liquidity. When you have such a build up of liquidity, you need a shakeout. And in this case, when I've recognized an internal trend that price is going from this Asia high liquidity to this demand area before going on to make a higher high, I know how is it going to do that. The way that price is going to do that is going to be two legs. So we have the first leg, retracement, maybe a final inducement of these highs to target this trendline liquidity. So everything was mapping out. We had trendline liquidity to target, so we had equal highs to induce, and then we started to do an inducement of that, meeting that supply area, which was a inducement supply. Why? Because it did a buildup of liquidity, inducement, and then mitigation over here with another inducement. So what's in control? Inducement number one at Frankfurt Open, inducement number two at London Open, both on the minute. This is not a coincidence. This means something. And then what happens over here? Another inducement, and then price follows that perfectly into that demand. When it goes to that inducement demand right here, where does price do? Tap right into that perfectly, not a pip difference, and then goes on to make a new higher high. If you're not a believer of inducements and market structure and these kind of things, you're blind. Like, these things happen every single day, every single case study, every single trade I take, they're always the same, following inducements. Now, when I get to the New York window and I'm looking at GU, I'm seeing prices completing its complex pullback and arriving to this supply area. It's a very small, refined supply area, refined on the 5-minute time frame, and I want price to reach it, but now I need to make a decision because price doesn't have to reach my preferred zone. It might reach the 1 hour zone, the 30-minute zone, not necessarily the 5-minute zone that I've marked. So what do I see? Price is taking London high liquidity. Boom. There's a liquidity pool there. Price is taking a build up over here and a local inducement. So when I see that inducement has happened and then is given a bearish reaction, I'm considering, okay, is this now the trinity developing? Because time is around the window. I'm a few minutes away from my key window. I've got inducement, I've got break of structure, therefore lower time frame confirmation, and I've got time window. This is looking great. But I have a couple of doubts. Number one being, is price going to come all the way up to my preferred supply zone? And number two, what if this is a build up, this is an inducement, and then it's just simply going to do this? And then I should maybe even look to buy. So when you have doubts because you have an inducement high and maybe an inducement low, you have a demand area over here, you have a supply area over here, you have now arrived at an inflection point. How do you navigate inflection points? Refer to the live stream where I was exactly discussing this with the members to say, how do we navigate this? Download the resource that I'm having free for you so you can actually learn these things. So why I'm actually even interested in selling is because this was a weak demand area and I'm actually preferring price to come to this demand because this is the same inducement demand that made a higher high. Inducement demand that makes a higher high, I want price to come back to this demand to then go on to make a potentially new higher high, or from the supply zone make a lower low. But either way, I want a reaction and I want to take out this area. So now that we've seen the cause and the effect of this inducement, the cause being the inducement sweeping liquidity of London high, equal highs and minor inducement, and then leading to a lower low bearish reaction, I need to just confirm if this is an inducement low or not. How do I do that? I look at EU. So that's why I was having both pairs open. And I started to see, as I approach my key window, as the key window opens on the minute of the key window, this gray box, I can see price is not only coming out and inducing that supply area, it's actually making an inducement of that. It's also doing a divergence because this is making a higher high. Notice this, and let's plot the time as well. Around the key window, or 2 minutes past the key window, price is making a higher high and inducing a supply area. Here, price is barely reaching the supply area. In the key window here, it's actually doing the opposite. At 1 or 2 minutes past the key window, it's respecting. So this is where on the stream, I gave the sells to say, hey guys, it's worth selling from this area with a 3 pip stop loss or so, entering right there and going for my standard 1 to 3, 1 to 10. So that would be my TP1, and usually TP2 is at 1 to 10. So that was the setup. I took it on the stream live in front of everybody because this is how I trade. I document everything. And what did I see to highlight this? So even though I had doubts, some doubts that why has price not come to my supply area? Is this an inducement low after this trendline liquidity? I did have these doubts. How did I overcome them? The Trinity once again. Did I have an inducement? Yes. I induced a few things, London high and minor inducements. Did I have lower time frame confirmation? Yes. Inducement leading to break of structure. And do I have the time window? Yes. Bang on the minutes of the time window, not a coincidence. And how can I supplement and add a few things? Because I do have a little bit of doubts. Number one is the divergence. The divergence and temporary depegging between EU and GU. This is giving me a reason to enter the trade. But this is how I executed the trade. And because I have trend on my side, price to go on to make a new lower low based on the daily cycle variation we discussed at the beginning, this was a perfect way for me to get in. So I got into the trade. And like that, by the way, the break-even protocol is after an M1 shift. So break-even was right here after a shift on M1 structure, the break-even protocol, and then eventually price tapping towards our right there towards our 1 to 3. At this point, because this is doubt, because there is doubts here to say, is this an inducement demand or not? There is also a fair, valid reason to say, I'm going to take a full volume at my 1 to 3, therefore locking in 3%. Or if you want to be a bit more aggressive and you're going for that full 1 to 10, then you can actually take in a partial, lock in 1.5%. So 1 to 3 risk reward, you can take your full 3%, or 1 to 3 risk reward, you take half your volume, take 1.5%. Either way, profit secured, depending if you're feeling aggressive or conservative. That's what I mentioned on the live stream too. Now, as this is presenting and I'm giving a space to play out, I'm also keeping an eye on EU. And I see after EU has done that inducement high, I want to see once again, I have time window, I have inducement. Do I get my lower time frame confirmations? And I see price after that inducement keeps going higher. And after that final inducement, after the divergence, after a buildup of liquidity over here, we have that final inducement. We have a minor inducement of equal highs, inducement. And then what does it do? Leads to an internal break of structure. An internal break of structure is a valid way to get in. So what do I have? Do I have the Trinity? Yes. I have an inducement of a supply zone. I have exactly the New York key window, and I have lower time frame confirmation. That Trinity once again. And I have targets, which is demand areas below. But this is all looking perfect once again. So once again, I called the trade and I said, guys, you can actually get into this sell. This is a valid sell right here. Stop loss at the high, 3 to 7 pip stop loss. That's my key window of stop loss size. Everything lined up, going for 1 to 3 partial, which will be around here, 1 to 3 partial over here, and then the full 1 to 10 lower low. So exactly like that once again. And I mentioned on the live stream, because we've taken a partial over here, or maybe in full volume, you've got at least 1.5 or 3% profits. Now you can take this profits and leverage that into EU. So you're not risking your own capital anymore. You're risking the house's money. And that way, with the profits, you leverage your profits into EU. You put 1% risk in, but it's not your money. It's profit of the day. And that's how you can add in a trade. I personally didn't take this trade because I'm not a huge fan of internal breaks of structure. I like full breaks of structure. And I was already content with the profits and the trade that I was already in. I personally didn't get in, but I mentioned on the stream this is valid. And I encourage people to get in if they wanted to follow the plan, because this follows the Trinity, follows a good theory, and is worth it in the system. What does price do? Taps right in, perfectly close that imbalance. Perfect entry once again. What does it do here? Building up all of this trend line liquidity. That all needs to be liquidated. Knowing that price is magnetized towards that area, I know my entry is safe. And then eventually, very quickly, 1 to 3 risk reward over here. Now, playing the rest of that trade out, because we break even after the internal break of structure over here, after the M1 shift, our break even point is right here. So our break even point was here. Our partial point was over here. So when price did this retracement, it took us out of the trade. That's fine. We already locked in 1.5% gain on EU. And then with GU, the previous trade, we locked in either 1.5 or 3%. So total for the day, 1.5 plus 1.5, 3% gain live on stream. Or if you're a little bit more conservative, you actually got 4.5% gain live on stream. And by the way, I didn't just catch these things myself. The members on the live stream caught them too. And you can see these various screenshots where the traders from the community were actually taking these trades alongside me, profiting from it, getting close to getting funded, making good money, placing good lot sizes, and overall winning together, taking high quality trades together. And what was this based on? The Trinity, as always. Let's see how this ended up and concluded. This one ended up going nicely towards our direction. It was just after hitting us out for break even, so that it is what it is. And then GU in the end, I think it peaked out at 1 to 6 around this area, and then we didn't actually get that full 1 to 10. So we concluded that day with nice profits, not only myself, whilst I'm traveling, live streaming, and doing it together as a team. So a lot of interesting things that we have covered in this video, a full guide on exactly how to navigate the daily cycle variations, the importance of time, the importance of inducements, and the importance of lower time frame confirmations, that exact Trinity, and how to enhance your market structure read, not just trend and points of interest, but a collective view of all of these things, exactly how I'm able to make millions of dollars from the markets, how I'm able to live stream my trades in front of people, call it live to the public, and other people taking these trades alongside me, other people taking the same trades without me, following the exact system. And how will we be able to do this? Not just following the plan, but as always, being restricted, because a restricted trader is a profitable trader.